Good afternoon, friends. We are seeing today Workbook, that is a paper 5 financial accounting group 1 of intermediate. You are watching CMA Leaf channel. If you are not yet subscribe the channel, please subscribe the channel and click on bell icon for more updates. Now let us come on start with our subject, which is group 1 paper 5 financial accounting. That too we are seeing financial accounting workbook. Okay, so I will tell you the what is the important things in the workbook. Workbook is the main important points are you have to focus on objectives, because in the question paper nearby 25 to 28 questions which related to objectives. So don't leave objectives anywhere from module, from workbook, from MTP, from OTP, because you just read once or twice or thrice it will be set. Just apply some common sense how to keep in the mind. Okay, so we are going to financial accounting, that is we are going first chapter, that is a basic. In that is important for objective. Okay, don't neglect any chapters. Fundamental of accounting basics, you can see here section 1 accounting basics. In that fundamental of accounting and accounting for special transaction, it will come more detail. So now we are going to see objectives of fundamental accounting, which will cover the match the following, true and false, fill in the blanks, and objectives of four alternatives they will give, and we have to select that. Okay, so now we are going to start about workbook financial accounting chapter 1, that is a fundamental of accounting. Okay, just when you are studying this kind of questions, objective type of questions, just keep some mind in tricks. Okay, because there are a lot of objectives. So I will tell first module objectives are important, then go through the RTP objectives, MTP objectives, scanner objectives, and then workbook objectives. Okay, module objectives are very important. First preference for module, anytime first preference for module. Okay, so choose the correct alternatives what they are asking. First one is the art of recording transaction in a set of books in referred as, that is what they are giving for option: bookkeeping, accounting, auditing, writing. So first option is the art of recording transaction is set of books is referred to as bookkeeping. So option is A. Okay, they are given already, answers are there, but just see here what I'm telling. Which is the which of the following is our objectives of accounting? The compare income against expenses and know the net result of thereof. Obviously to compare the expenses and income, and what is the left, and the know the net result. If expenses is more, it is loss. If income is more, it is a profit. The same that is the correct concept. The asset, and option B, the asset, the financial position of the entity. The assess the financial position of the entity, that is also correct. Our financial position of the company is good, so it will be tell as a good position. If it is down, it is in loss. So option 3, to provide the record for compliance with statute and apply applicable of law, that is also same correct one only. So what is the option we have to choose? Option 4, all of the above. For the question 2, which of the following is our objective of accounting? All of the above is the answer. Question 3, gross working capital is equal to total current asset. Okay, working capital, total current asset only. Total capital, total asset, total current asset, current liability. Current asset minus current liabilities. So what is the answer? Answer is C. We can see here answer they are given A, D, C, C, C. Okay, so here third question, gross working capital is equal to the total current asset. The financial statement that reflect the financial position of the entity on a particular date is referred as balance sheet. The answer is balance sheet. The financial statement reflect the financial position. Obviously in balance sheet you will get to know what is the profit, what is the loss, because balance sheet is the perfect answer for the financial statement, or which will reflect the entity it is in profit or loss. So cash flow, it will go the expenses, different data. Income statement also, that is different data. If you get exact answer only from the balance sheet. So balance sheet is the answer. The amount invested by the owner into business is called capital. Obviously the amount invested by the owner in the business is called, that is a capital. So this is the answer A, D, C, C, C. Match the following. Already they are given here answer. Cash discount, I am going to the answer only. Just read questions also properly. Don't go with the directly answers. I'm not reading, it doesn't mean you should not go questions, because in question paper they will go up and down, anywhere they will give somewhere. So don't get confused. Just cash discount means allowance by seller to buyer for prompt payment. Keep in that. Don't go, oh this will go up, this will down up. Not in that way. Just understand in your understanding way. Cash discount, I'm telling answer here. You can see this column. Read the question yourself properly, and I'm just telling column. First one, cash discount allowance by seller to buyer for prompt payment. Cash discount allowance by seller to buyer for prompt payment. Credit transaction without immediate cash settlement. Okay, credit transaction, when we don't have cash, we'll take on credit transaction. That is, we have to keep that in mind. Transaction without immediate cash settlement. Without immediate cash settlement, there is a credit transaction. Okay. Liability, amount owned by the business, external parties. Liability, we take a loan from the other parties, external parties. Okay. So this is just apply your basic common sense, you will get to know. Contingent liabilities, obligation that may or may not be materialized. Contingent liability, there may be that is important or not important, they are telling. So just apply common sense, that is enough. Contingent liability, obligation may or may not materialize. Loss, excess of expenditure over the income. Obviously if expenditure is more, that is called as a loss. Over the income it should be. Okay, now we are going to the fill in the blanks. First one, dash dash is the branch of accounting deals with the process of ascertaining the cost accounting. Because just see, ascertaining the cost they are asking. So first one, dash dash is the branch of accounting that deals with the process of ascertaining cost. There is a cost accounting. Second one, the main objective of accounting is provide dash dash information to the stakeholder. The main objectives of accounting, obviously financial information, because the main objective is accounting is the financial only. So this is the answer, financial only. So keep just in important points. When complete sequence of accounting procedure is done with happens frequently and repeated in the same direction during the accounting period is called as accounting cycle. When the complete sequence of accounting procedure is done which happen frequently and repeated in the same direction during the accounting period, that frequently or that cycle will complete, what will call for that accounting cycle. If you go through the material, study material, you will get these answers. Okay. The fourth one, the dash dash represents the excess of the total asset over the total liability of business. Obviously net worth. Dash dash the represent the excess of total asset over total liabilities of a business, that is a net worth. Okay, so next one is the liability that expected to be settled in the entity normal operating cycle is called current liability. So the liability that is expected to settle the entity normal operating cycle is called current liability. This is the answer. We done with the fill in the blanks. So next we are going true and false. They are given answer, but I will read it once again, because sometimes if you listen means will get very easily to capture. So just I will read it, just listen it properly and apply in the examination. Don't simply go and write the examination, because CMA course is not at all easy what you are thinking. It is twisted questions they will give, whatever they will do. So just be careful every time, be alert. Okay. State the following: the transaction of business are recorded in the uh, journal chronologically and in a classified manner. First, the transaction of a business are recorded in the journal chronologically and in a classified manner. They are telling it is a false. Okay, so we'll go to the next question. That is the bookkeeping being routine and repetitive work today in the world, it is taken over by the computer system. Obviously, whatever the repeated works are going nowadays, the works are done by computers only. Okay, so that is obviously true. Information about the financial position of a business is a primarily provided in the income statement. No, it is a provided in the balance sheet, not income statement. Okay, so this is false. Now, trade discounts is allowed by seller to buyer making a prompt payment. It is a false. The same thing they are giving in the match the following. So it is false. Trade discounts allowed by the buyer to seller for making prompt payment. It is not seller to buyer. Okay, so false. Management accounting is primarily based on the data available from the financial accounting. So it is true. Management accounting is that primarily based on the data available in the financial accounting. Management accounting is primarily based on the whatever the data available in the financial accounting, that is only it is based on the for that based only management accounting will run. So that is true. Management accounting is primarily based on the data available from the financial accounting. So the statement is true. Now we have done with first chapter, that is a basic. Now it is a multiplier accounting principle concept questions. Again they are given multiple choice questions. We'll see that one in next video. So basic theory part objective type of questions we done here. So in next video we will continue with the next chapter. Thanks for watching the video. Thanks.